Amanda and Taylor. On behalf of GoodWolf Counting, we would like to thank you for this opportunity to continue to assist in the growth of Humble Pies. We hope our efforts contribute to achieving your long-term goals.
We sense your dedication and commitment to producing the most unique and sophisticated pies on the market. You started as a savvy, natural grassroots company, and we want to help you maintain that personality as you continue to grow.
The four of us also started as close college friends with the goal of helping others by using our knowledge of accounting. We began as a small group of tutors and later expanded into our own company after graduation. Here at GoodWolf Counting, we stand by our commitment to help others make informed managerial decisions.
Before discussing the viability of each investment opportunity, we would like to explain the assumptions made in our ROI calculations. In order to accurately assess the return of either option, we applied a discount rate to adjust future returns to present value, as well as compensate for risk and uncertainty. Based on our industry-related research, we determined a discount rate of 10% was appropriate. Although the investments vary in risk, we've decided to apply the discount rate to both options for comparability purposes. Because both options generate the same depreciation tax shield, we've left them out of our ROI calculations. However, we still want to inform you of the additional tax benefit of either investment. Based on standard IRC makers classifications, both of the investments will be classified as a 7-year makers assets. Using projected revenue of $9.3 million that you've previously provided and an approximate net income ratio of 6%, we have estimated a corporate tax rate of 34%. We've applied this rate to a tax depreciation schedule and determined the total tax savings for both investments.
You have recently brought to our attention 2 equipment investment opportunities. Our goal is to help you assess the strengths and weaknesses of each of these options.
While considering the first option, the partnership with a major fast food chain, we addressed both the financial and strategic effects of accepting the agreement. While we believe this option is more financially profitable, we also think it is very risky. Our calculations show that after the purchase of a specialized packaging machine, this contract would not become profitable until after the initial 3-year contract. If the fast food chain chose not to renew the contract after the 3rd year, you would continue to pay for a machine which in no way benefits your production, and earnings would decrease over the next 7 years. Alternatively, if the fast food chain chose to renew the contract or even renegotiate for more units, the investment would remain profitable and create a greater return.
There are also many strategic factors to consider for this option. The purchase of a packaging machine solely to support one customer would result in a dependent relationship. This dependence could alter the amount of freedom that you have in your decision-making processes and in the creation of new recipes. The partnership with a franchised fast food chain could detract from the uniqueness of your product line. This option may impact the sales of your other product lines. By giving your customers a cheaper substitute through a fast food chain, they may be less likely to purchase your larger pies. Due to the organic and quality-centered nature of your products, we believe that a partnership with a fast food chain may hinder your customers' perception of your pies. Customers may adopt the perception of the fast food chain and associate it to the quality of your pie.
Your second option includes an investment in a new machine that will reduce your labeling and packaging inefficiencies. This option will become profitable in the 3rd year and remain profitable over the equipment's useful life. Although this offers a smaller return than the first investment, the return is guaranteed and there is no risk of an expiring contract. Also, if you continue to use the equipment beyond its stated 5-year useful life, it will profit at a greater rate than the first option.
This investment is strategically beneficial because it can be used across product lines and will reduce the labeling bottleneck, which is one of the main problems you've brought to our attention. We believe that this option generates slower but more stable overall growth. It will allow your company to remain in control of its business decisions and keep your company focused on current product lines. This option generates production savings which can be reinvested in the business. You can improve other production processes, expand to new grocery stores, or give back to communities which you currently occupy.
In summary, we've determined that both investments are potentially profitable but offer differing strategic factors. The first investment could secure revenue for 3 years and create a lasting partnership, but it could also create a dependency on the fast food chain and limit the growth of current product lines.
Option 2 is an investment that benefits all product lines. This option would improve efficiency in packaging as well as lower the related costs. This option would therefore allow you to focus on improving other processes, creating innovative recipes, as well as targeting new markets.
We believe it would be most beneficial to focus on Humble Pies' long-run strategic approach through the natural and organic growth provided by option 2.
This option will reduce your current labeling bottleneck and associated packaging label costs while allowing you to maintain control over future decisions regarding your products and business model.
You'll also see in our supporting document we've outlined our calculations in determining the profitability of either option, and we've also provided a maker's tax depreciation table for the purchase of either piece of machinery.
As always, we are happy to answer any questions that you may have, and we look forward to hearing from you soon.